and the fine print, we are joined in by an eminent panel of experts. Joining us today on this Saturday afternoon, we have Jayant Das Gupta, former ambassador and representative of India at WTO. We have Ashok Sajjanor, former ambassador, and R.K. Vij, who's the president emeritus at the Textile Association. Gentlemen, welcome to ET Now. Let's just begin this conversation with you, Mr. Jayant Das Gupta. Given your experience at WTO, how does this interim framework align with India's interests?
Have some very positive features about this framework agreement. One is that the U.S. has agreed to, without specifying a date, that it will bring down the tariffs to 18%. And as the executive order on the purchase of Russian oil, relating to the purchase of Russian oil, has already spelled out, the 25% tariffs imposed as punitive tariffs have been removed. So it is 25%, and at some future point of time, it will get reduced to 18 for all products. That is the positive feature, because it will put us at a lower tariff rate as compared to, let's say, Vietnam and Bangladesh and Pakistan and many of our other, China, 34%. So that would be a very positive thing. And especially so for our labor-intensive sectors like textiles and clothing, leather, gems and jewelry, etc. Now, the other positive feature is that the U.S., if my reading is correct, has said that depending on the successful conclusion of the interim framework agreement, the interim trade agreement, they will reduce the tariff or remove the reciprocal tariff, which my reading is that they will also remove the 18% tariff, and it will be back to MFN tariff. So that is the second very positive aspect. As far as the negative aspects go, I think there is a big question mark about this Russian oil tariffs of 25%, because the U.S. has said that not only the sanctioned companies like Lukoil and Rosneft, but any Russian oil bought from anywhere will make India subject to tariffs again, and it will depend on the determination by the U.S. officials, which means that USTR, perhaps U.S. Commerce Secretary, etc. So that is a very big
on this.
question.
On the Russian oil bit, Mr. Sajjanor, how does this agreement affect India's, strategic autonomy if we officially commit to halting, Russian oil imports?
Yeah, thank you very much, Shibani, for having me. I think that is definitely going to be a challenge because, what we need to recognize that this is not something that is emanating from Truth Social. That is not what Donald Trump has put on his, social media platform, or he has said something in conversation. But this is a part of the executive order, and the language is very, very specific. It talks about, Russian imports directly or indirectly. It doesn't give any leeway that it is only the sanctioned entities, import from there, it should not come, but it talks about all Russian oil coming to India. So that definitely puts India's strategic autonomy in, a difficult place in terms of our relations with the Russian Federation. Right from the beginning, from 2022, we have maintained that we will import oil from whichever source we want. We import oil now from 41 sources, 41 countries, including the United States, including Venezuela. We've been doing that. And so it really depends upon our companies who are there out in the open market, international market. They will see what is the best deal that they are able to get, and they are able to get that. They are able to import from there. But this language, which is very strict, which is very definitive, that definitely creates problems
strict
for
and definitive,
India.
and not on only Truth Social. But thank you for patiently patiently waiting, Mr. Vij. Now the textile and apparel sector is specifically mentioned as a big beneficiary of the 18% tariff bracket. How quickly do you expect Indian exporters to redirect from their supply chains towards this? And what has been the reaction among some of the exporters that you must have definitely had a conversation with them?
Good afternoon, Ram Ramji. It is a very great day today that this has been effectively, immediately. Best benefited will be the textile only, because we are the largest employer of the job. After 28th of August, when the tariff was levied, 25% extra over some of the production area of Tirupur, Panipat, Ludhiana, Faridabad, they immediately start cutting their production by 20 to 30%. And the prices also, the profit margin, the prices also went down to 10 to 12, 15%, because America is a very big market for us. And from the last so many years, we were exporting about 10 to $11 billion of the textile export, majorly garment, home textile, carpet, rugs, etc. So, and all machines were set accordingly, and lot of material, raw material, all we were supplying there. So it will not take much time just to restore everything. I just got a telephone in the morning itself from the Panipat and from Tirupur that within 20-30 days we will start our, all the machines. And plus point was there that earlier they were giving 15% discount on their prices. Now within 2 days the discount has come down to 5%, and the orders, suppose a customer is getting the order of about 10 crore of monthly order, and after this tariff it came down to 7 crore rupees, and immediately within 4 or 5 days they got the order of 5 crore rupees. So I think because USA is about $90 billion they import it, and India 30% supplying out of their total export to USA.
Yes,
it will come.
US is one of the most favorable nations, for exports. But, over to you, Mr. Das Gupta. Now, US has reduced tariffs from 50 to 18%, but yet 18% significantly remains higher than the average US most favored nation's tariff. For example, UK is at 10%, Japan is at 15%. So is essentially India celebrating a partial removal of the so-called punitive layer rather than actually achieving a truly preferential access, according to you, Mr. Das Gupta?
There are two questions, I think, which you have raised. The first one is about the implementation. The joint statement says the US will remove. Now, from which date it has not been specified, so it has not come into effect yet. That is the first point. The second point is, as far as the labor-intensive industries are concerned, the UK, which is at 10%, the EU, which is at 15%, Japan at 15%, Korea at 15%, but now possibly another 25% will be slapped on it because the Korean parliament has not okayed the Korea-US deal yet. So these are not competitors for the labor-intensive industries like leather, like textiles and clothing, etc. So if once this 18% comes into effect, we will be competing against, let's say, Vietnam, Bangladesh, Pakistan, other Southeast Asian countries like Indonesia, which would be 1% higher. So that would make us possibly the cheapest source amongst the competing countries in the labor-intensive sector. The third point is about MFN basis. Now, that is all being thrown to the winds by the Trump administration because it does not subscribe to the MFN principle at all. And all these agreements which it has signed, they are not free trade agreements under the, as described in the WTO. They are just partial trade deals. And the MFN principle has been given the go-by. In fact, the US has also tabled a proposal for WTO reforms, which is likely to come up in the next ministerial conference of the WTO in March, which says that MFN should be given up completely in the WTO. So that is as far as MFN is concerned.
Absolutely. Mr. Das Gupta, Mr. Sajjanor and Mr. Vij, thank you so much for joining us. There's so much to discuss, but I'm afraid I'm very, very short on time today, this afternoon. But thank you so much for taking out time and joining us for this discussion. Well, on that note, it is time for us to slip into a very short break. More news to follow on the other side of this break.